Hi guys. Let's start the new chapter, which is actually fraud and responsibilities of auditor. Simply nothing but responsibilities relating to fraud. Actually, what is the previous chapter? Documentation and evidence. And I told you very clearly, it is nothing but a standard. Documentation 230 standard, full 230 we discussed. SA 500 we discussed. 330 related content which is not there in CA into but given in the ICA study material as a chapter that we completed. So now we are starting. Now we are going to discuss about fraud and responsibilities of auditor, which is actually nothing but SA 240 standard. So in this chapter, we are actually discussing 240 standard. Now here many students without knowledge or with ignorance, some ask me this question, sir, what about SA 230 or what about SA 240? This chapter itself is SA 240. First of all, understand that. Outside, I can tell you honestly, there are many standards classes where they take 240, 230 as part of standards. But you know how much time they'll complete 230 within 1 hour. But imagine, not even 1 hour, hardly 20 minutes or 15 minutes they complete. But 230, imagine we discussed documentation at full level, 1.5 hour we discussed. Documentation content. Evidence content we discussed approximately for another 1.5 2 hours. Then we discussed 330 related for 1.5 hour. Then as a whole, in order to understand all this, we discuss some introduction itself, some 1.5 hour. So you need to understand how things work. So let's discuss SA 240 standard, nothing but fraud and responsibilities of auditor. SA 240 standard heading is what are the responsibilities relating to fraud, for an auditor in an audit of financial statements. So in an audit of financial statements, what are the responsibilities of auditor in relation to fraud? So in relation to fraud, what are the responsibilities? First of all, let's once again recollect from the overall view of the audit. What is the objective of audit? The objective of audit is to give opinion. Just a minute. The objective of audit is to give opinion. What opinion? Whether the financial statements are free from material misstatement. Now, misstatement can come from two things. Either a misstatement is a result of fraud or misstatement may be a result of error. If a misrepresentation in the financial statements is done with an intentionally, with knowledge, that's called as a fraud. If at all a mistake happened in accounting or financial statements, getting it, it's called error. Unintentional mistake is an error. Intentionally, if you do, it's not a mistake anymore, it's a fraud. Now, what is fraud in the context of audit? Now, you see the fraud definition here. What is the fraud? You see, if you look at criminal code procedure or Indian penal code or any other, general and civil laws, the definition of fraud is much wider. But here in the audit subject, especially, we are not discussing simply audit, we are discussing audit in the context of financial statements. Correct? So in the context of audit of financial statements, what do you mean by fraud as per the standard on audit? Fraud is an intentional activity. It's an intentional act by one person or more than one person, obviously individuals, among whom it may be management, those charged with governance, top management, other employees, or even third party, involving use of deception by using some intentional with malified intention to obtain, what is the purpose they're doing? Some advantage which is illegal, which is not justified, unjust. So fraud is an intentional act by people within the company, management, employees, top management, or outside the company, third parties, with a view to obtain some benefit which is not legal, which is not justified manner. So that is nothing but fraud. As per the standard, this is a fraud definition. And you see, here they have clearly used the word to get some advantage, to gain something. This activity is done, and that's called fraud. That is called as fraud. And you know what? The standard divides the fraud into two types. The standard divides the fraud into two types. One is fraudulent financial reporting another one is misappropriation of assets. One is fraudulent financial reporting, another one misappropriation of asset. What is fraudulent financial reporting? What is misappropriation? Before that, sir, how do an intentional act? Okay, sir, I understand. A misstatement is two types. It may be a fraud or it may be error. A misstatement in the financial statements can come because of fraud or because of error. My question is, how fraud will cause a misstatement? How will a fraud will cause a misstatement because of intentional act? How a mistake can appear in the financial statements, sir? He did some fraud, but how financial statements are misstated because of this? What is the link? The link is, it may be in two ways. The link can be in two ways. Fraudulent financial reporting. Fraudulent financial reporting means what? You are reporting something wrongly, intentionally, fraudulently. Misappropriation of asset means what? Example, theft. Misappropriation of asset means what? Theft. Misappropriation, cash is misappropriated. In so and so government official has misappropriated in so and so project. You might have heard this kind of news. Misappropriation means what? Doing something behind or stealing something. Theft. Unauthorizedly getting something. Theft. Unauthorized. Theft. Getting it. Now, how a theft will result in? How a theft will result in misstatement in the financial statements. Now tell me, when a cashier steals some cash, suppose a cashier steals some cash, will he write a journal entry? Steal account data or theft account data to cashier account, is it? Obviously not. So he will not write any journal entry. So what will happen? Suppose if a cashier, if the cash balance in the company is actually 10 crore, the cash balance in the company is actually 10 crore, and an employee steals some 50 lakh rupee, the actual cash balance will be 9.5 crore. So whatever 50 lakhs he misappropriated, generally what he will do, this 50 lakhs he misappropriated, right? But how he will record, in the books of accounts, so that this mistake will be, so that this mistake will not be identifiable. What he will do, he will write some dummy entry. Just a minute. So he will write some dummy transaction, some expenditure transaction, some dummy payment transaction, something like that he'll do. Now tell me, some expenditure he will record, some bogus expenditure he'll record. Let us assume he is recording it as repairs and maintenance. Actual repairs and maintenance is 9 crore during the year. But because of this cash theft, because he is treating it as repairs and maintenance, how much repairs and maintenance is showing? 9.5 crore. How much profit is reduced? 50 lakhs. Now tell me, because of the theft of cash, what is happening? Repairs expenditure is showing higher amount, profit is declined, cash balance is lesser. Now in this way, a misstatement, is it giving a misleading picture or not? Actual repair is 9.5 crore. No, only 9 crore. In some cases, the person who committed theft may not be cashier, may not be accountant, may not be internal, maybe a third party committed fraud. Example, in warehouse, 10 crore worth of inventory is lying actually. Even in the books also 10 crore. We physically went and verified 10 crore. Everything is fine. But later what, the next day, 1 crore worth of inventory was stolen by thieves. 1 crore worth of inventory was stolen. Management don't know that. So books of accounts and balance sheet is showing how much? 10 crore. But in reality, physical inventory is how much? 9 crore. Now tell me, is company balance sheet representing the real picture? No. So in this way also, financial statement is showing overvalue of the inventory when the inventory actual value is only 9 crore. Correct? So by misappropriation, how financial statements will show a misleading picture, I told you. Financial statement may contain a true number, actually the number is correct, but in reality that is not there because of theft or something else. That is misappropriation of asset, which will result in fraud. Next, fraudulent financial reporting means what? What do you mean by fraudulent? Fraudulent financial reporting. Fraudulent financial reporting means nothing but manipulation of accounts. It's also called as manipulation of accounts, or manipulation of financial reporting, or manipulation of financial statements. Here the organization is manipulating. Example, my organization is not at all performing well, but I do not want to show that real going concern is affected. Example, my company going concern is not there. Okay, when the problem comes so severe, that time I can't do anything. That time, okay, I will somehow come side. I'll just move aside. But until then, I want to manage. Actually, my company cannot continue. My company going concern is missing. No possibility at all. Completely losses. But you know what? I prepared financial statements with going concern assumption, even though I know going concern is missing. This is a case of fraudulent financial reporting because management is doing intentionally. Or company they intentionally ignored the valuation principle for inventory, cost or NRV, whichever is lower. Suppose the cost of inventory is 10 crore, NRV is 8 crore, valuation should be at 8 crore, but company ignored. No, let us not keep 8 crore. If at all we keep 8 crore, profit will reduce by 2 crore. So let us not keep 8 crore. Let us put it at 10 crore. Knowingly they did this. This is called as fraud. Able to understand? All of you. So if auditor identified a fraud, getting it? What auditor has to do? First of all, is it the responsibility of the auditor to identify all frauds and errors? Impossible. Identifying frauds and errors is impossible. It's not possible for the auditor. It's not auditor's duty. What is the objective of auditor? What is the duty of the auditor? The duty of the auditor is to give opinion. Whether financial statements are free from misstatements, that to which opinion? Reasonable assurance. Is not absolute assurance. Based on your audit, based on your sample, how is financial statements? That's it. Are you liable to discover all the frauds, all the errors? Nothing, but are you liable to discover all the misstatements? Impossible, because of inherent limitations. So now what standard says, sir? Then what the standard says? The standard says very simple. It is not 100% responsibility of the auditor to identify a fraud, but when he did risk assessment, when auditor performed risk assessment, if at all he came across any symptoms of fraud, any indicators of fraud, any suspicious activity, please investigate. Maintain skepticism there. Sir, I went for audit, 40 days I was there. I didn't find anything suspicious. Yes, I am skeptical. I am very alert. But I didn't find anything suspicious activity in the company. Everything seems fine. And I took sample, I did audit, I verified so many things. I did not discover a single rupee fraud. Maybe, sir, in reality, in books of accounts, in financial statements, in this company, some frauds were there. But I didn't discover. Even management don't know. But some frauds were there which were not detected, undetected. Now tell me, is auditor negligent here? Can we punish the auditor because he is not discovering the fraud? No, not at all. We only see whether auditor has done proper due diligence. We only check whether auditor has verified books of accounts, financial statements properly. We only see whether his documentation, evidence collected supports the conclusions and the opinion given. In fact, this auditor said everything is true and fair when there are so many frauds. But he gave true and fair unmodified opinion because based on his examination, based on the information he got, he didn't identify any suspicious things or he didn't identify any misstatement and he did proper job. So he gave unmodified opinion. You can't punish him. So remember, if at all an auditor gave an unmodified opinion, example, and after giving unmodified opinion, after some years or after some months, if a fraud has been discovered, don't straight away ask a question. Don't straight away blame the auditor. Hey, what auditor is doing? We are paying fee. No, don't blame. Why are you blaming? Auditor's job is to give reasonable assurance. His job is not to give absolute assurance. For your information, he is not liable to discover each and every fraud. It's not his duty. I will go and check. See, example, you want to buy a car. You want to take a mechanic opinion. You took one mechanic along with you. He drove the car, checked wheel alignment, checked the braking, checked the engine overall condition, all that. and he said, yeah, this is good. This car is good. Condition is good. He replied. Later, after 1 or 2 months, some problem was there with the air conditioning system or compressor is not working. You cannot go back and ask mechanic, hey mechanic, what AC is compression is not working. What you verified? No, I only did a reasonable basic examination. Getting it? Based on whatever I felt at that moment, I said everything is fine. I don't know that inside compressor, inside so and so part, inside that there is some small problem. I don't know that. It's not visible. I am not verifying in depth. What? You want me to verify the car entirely opened? Should I open entire car into the parts and open every part and check it out and tell you? It's not possible. It's very costly affair. In fact, if I do that, the product will damage. Same way audit is also. Auditor will only do a basic due diligence job. He cannot do 100%. Now you may have another question. Sir, then why audit, sir? When he's only verifying part of it, why audit, sir? That's a basic assurance. That's a basic reasonable assurance. Getting it? Minimum assurance is at least required. No? If not 100%, at least I want minimum assurance, right? Why you took mechanic then? He will not discover 100% problems. No? Then why you took mechanic? Tell me. Exactly same logic. Audit is only a reasonable assurance. It is just like a speed breaker. Exactly. It is just like a speed breaker for the management, speed breaker for the people who want to do fraud. Exactly. I hope you got the point. Fine, why late? Let's continue. Now remember, although the fraud is a broad legal concept, the auditor is concerned only with which type of fraud? Only with that type of fraud which causes a material misstatement in financial statements. So which causes a material misstatement in financials, only that type of fraud I am concerned with. So frauds can be fraudulent financial reporting, misappropriation, theft, unauthorized using the asset, intentional misstatements like intentional omission, intentional misrepresentation, intentional manipulation of accounts, all that. Although the auditor may suspect or identify the occurrence of fraud, the auditor does not make legal determination of whether fraud has actually occurred. You need not legally determine whether is it a fraud, who are the parties involved, what is the, you need not do investigation. If you find a fraud, say to the management there is a fraud for this amount, for example. You need not do an in-depth examination for how fraud exactly happened. No need. Okay. Broadly, if you understand who did the fraud, where the fraud happened, how much amount involved, that's enough. And remember, fraud is something which is intentional. Misstatements in financial statements can arise either from fraud or error. The distinguishing factor between fraud and error is what? Underlying action that resulted in misstatements. If the underlying action is intentional, it's fraud. If the underlying action is unintentional, it's error. Suppose the accountant of the company, while entering a purchase transaction, instead of typing 10 lakh, he added one more zero, 1 crore. He also don't know. The person who committed the error doesn't know that he committed the error. Next, come to the 11th question, I think, after this. Not 11, sorry, 8th one. Detection of fraud is responsibility of an auditor. Comment, explain. False. Detection of fraud is not the responsibility of auditor. So detection of fraud is not responsibility of auditor. First of all, tell me whose responsibility primarily so that frauds will not happen in an organization. First of all, company is not mine. Company belongs to the Ambani family and shareholders. It is their responsibility to protect the business. So management, yes, SA 240, primary responsibility for prevention, for detection of fraud rests with both top management and other management people, mainly those charged with the top management. Now, what are auditor responsibility then? Auditor is responsible for obtaining reasonable assurance whether the financial statements as a whole are free from material misstatement. While obtaining this assurance, auditor is responsible for maintaining an attitude of skepticism. You should be always alert. You should be with a questioning mindset. Don't trust anything blindly. And remember, the risk of not detecting material misstatement from fraud is higher than the risk of not detecting one resulting from error. These are all important for true or false statement or MCQs. Now tell me, which is easy to identify? Suppose if there is a mistake and that happened unintentionally, can we discover that kind of mistake easily? Or if somebody did a mistake intentionally, can we discover this easily? Which one is easy to discover? Sir, obviously error. Why? The person who did the error, he doesn't know, sir. First of all, he just did the error, so he will not hide it. Whereas the person who did the fraud, he knows that and he's doing. When he's doing something knowingly, he want to conceal it, so he will hide it. You can't discover. Fraud, identification of fraud is very difficult compared to identification of error. Where the risk is very high, in fraud the risk is very high. Detection risk means, you know what is detection risk? Risk of not detecting. Detection means identifying. Risk means not identifying. Detection risk for fraud is higher. Detection risk for error is lower. General principle. Risk of not detecting a material misstatement from fraud is higher than risk of not detecting from error, because fraud may involve sophisticated thinking, careful organized schemes so that they can conceal it, like forgery, intentional failure to record transaction, intentional misrepresentations, all that. Such attempts at concealment may be even more difficult when accompanied by collusion. If multiple people involve and hide something, it's impossible for you. Collusion makes detection difficult. Suppose in cash, some shortage is there. How do I find cash shortage? Physically 10 lakhs is there, but in books of accounts 12 lakhs is there. What if cashier and accountant, both of them colluded, and both of them together, they're stealing 2 lakhs. Now cash balance reduced to 10, accountant also will pass a dummy entry for 2 lakhs, so that book balance also looks like 10 lakhs. Books and cash, both are matching. You will not get a doubt at all. If multiple people collude, you will not be getting any doubt. That's why in many big companies, control over the assets will not be with one person. Duties are segregated among people. Now you see, collusion may cause the auditor to believe that audit evidence is convincing when in fact it is false. Because of collusion, you feel that evidence is convincing, persuasive. Remember, this entire sentences are important for true or false and MCQ. Further, the risk of not detecting a material misstatement from management fraud is greater than employee fraud. If a low-level employee do a fraud, we can easily identify. But if a top management level do a fraud, it's difficult because they are in better position. They can hide everything. They can manipulate records, everything. Because management is frequently in a position to directly or indirectly manipulate records, present fraudulent financial information, override control procedures designed to prevent similar frauds by other employees. Suppose we kept a barricade system, watchman, security guard, everyone is there, so that the asset inside the company will not move out. What if the director of the company want to take one asset and moving out? Will watchman stop him? No, that's called overriding control. Now, sir, whether an auditor detects frauds, or not, just a minute. Whether an auditor will detect the fraud or not, it depends on so many factors. Skillfulness of the perpetrator, if the person who committed the fraud, if it's highly skillful, you can't detect easily. Degree of collusion, number of people involved more, you can't identify. Size of the amount, how much amount fraud. If the amount is very big, you can identify. If the amount is very small, difficult to identify. Experience of the person, frequency. If the fraud is committed more frequently, in the sample you select, it may come. If the fraud is committed one time, may be difficult. And see, remember, there are many opportunities for fraud. Especially in fraudulent financial reporting. I can manipulate accounts. I can manipulate in accounts in such a way people can't even identify that it's a manipulation. Example, if I manipulate accounting estimate, it's impossible for anybody to identify fraud. Suppose I want to show 10 crore higher profit. What I can do, I will revise useful life of asset. I will increase the useful life of asset. When I increase useful life of fixed asset, what will happen? Depreciation will reduce. I will show some reason why I increased useful life. And since auditor will not have the technical skill set, are this mission useful for 30 years? Auditor don't know, because we nowhere worked in that industry. We are not engineers. So while auditor may be able to identify potential opportunities for fraud to be perpetrated, it is sometimes difficult to determine whether misstatement in judgment areas such as estimates are caused by fraud. In accounting estimates, whether a fraud happened or not, it's very difficult to identify, because management may intentionally use some accounting estimate which is beneficial for them, but we don't know. Provisions, suppose company is about to incur some loss, for that they need to create a provision. This information is very difficult for the auditor to identify. The liability for the auditor, when auditor is liable, ultimately when auditor will be punishable for failure to detect fraud exists only when such failure is because of not exercising care and skill. If at all you didn't exercise care and skill, and that is a fraud which easily anybody can identify, it is apparent on records, it is apparent. By looking at the transaction, you can say it's a fraud. By looking at the ledger account, you can say there is a fraud. But you didn't discover that kind of fraud, how negligent you are. In such a case, auditor is not liable. So after completion of audit, if fraud has been detected, the same cannot mean auditor did not perform his duty properly. If auditor can prove with the help of working papers that he conducted the audit in a proper manner, he cannot be punishable. He cannot be held responsible for the same. See how the argument was, how clearly they have given argument. That's it. They may ask you a straight question on this. This one also can be asked as a true or false question or MCQ. Auditor is primarily responsible for prevention and detection of fraud. False. Auditor is primarily responsible for detection of fraud and error. False. Auditor is responsible to detect all the frauds and errors. False. So anyway, please understand the subject clearly. I'm giving all possible ways of interpretation for better understanding. Now you may get a doubt, sir, why people do fraud, sir? What is the reason? What is the logic? What is the reason, sir, why people do fraud? So what are the factors which cause people to commit fraudulent financial reporting, to commit misappropriation of asset? Nothing but to commit fraud. Why people do fraud? Because of pressures. They're having pressures, personal pressures, organization, business pressures, anything. Like fraudulent financial reporting can occur when management is under pressure from sources outside or inside the entity. From shareholders, everybody's pressuring. Hey, profits are not increasing. Competitor is working very well. People are pressurizing. So naturally, because of this pressure, because of this burden, what this director can do? Hey, let us do one thing. This year we didn't perform well, but if at all we go like this, the people may suspend me. What I will do? I will manipulate records. To achieve earnings target. Opportunity. Maybe if I am convinced, because of the power I have, with the power I have, I can steal some money of the company. Opportunity. When an individual believes internal control can be overridden, the individual has knowledge of specific deficiencies in internal control. All shareholders gave me power. Sir, up to 5 lakh rupees you can incur for company business purpose. I frequently went for travel. Personal works also I am telling them as official works, and frequently withdrawing money from the company for my personal satisfaction, for my personal reasons, for my personal purpose. The control given to me, I am abusing it, I am misusing it, I am overriding it. Next, individual's attitude, rationalization, attitude. Some people, some individuals, they possess an attitude, they possess some character that allow them knowingly and intentionally to commit dishonest act. So their set of ethical values, no, they don't have that ethical values. Their ethics are in such a way that it allows them to commit a fraud. Even otherwise, honest individuals also sometimes commit fraud because of pressure. When there is a pressure on them, even honest people do a fraud. So individuals means human beings can easily rationalize while committing a fraud. When a particular thing done by many, it becomes a custom. Exactly. Next. Now, write about fraudulent financial reporting in detail. So, especially when accounts are manipulated, you require greater intelligence to identify the accounts which are manipulated, because accounts cannot be manipulated by security guards. Accounts cannot be manipulated by billing persons. Accounts cannot be manipulated by marketing people. Accounts can be manipulated only by top management. Fraudulent financial reporting is something which can be committed by top management generally. Remember, it's very difficult to identify because highly intelligent people. This type of fraud is committed for various reasons. Why, sir? Why they do commit fraud, sir? Okay, pressures and all I understand, but examples. Maybe they want to avoid payment of tax, or they don't want to declare dividend in case of insufficient profit, or they want to declare dividend even though there is insufficient profit, or withholding declaration of dividend in case of adequate. I have super profits, but I don't want to declare dividend. But if I show profit and don't declare dividend, people may blame me. See, these are only examples. Okay, there are many reasons why FFR will be done. There are many reasons why accounts are manipulated. This is only example reasons. For receiving higher remuneration, where managerial remuneration is payable with reference to profits. I'm a director. For me, the remuneration is 1% of the profit of the company. Obviously, what I will pray for, profit should be higher. If profit is higher, my remuneration will be higher. In examination, why fraudulent financial reporting is committed? Why fraudulent financial reporting is committed? Give any 4 reasons. You cannot write your own personal reasons. Though they are logically right, but write only these 4, because suggested answer will contain these 4. What are the factors that result in commitment of fraud? What factors commit a fraud? Means it's not FFR, it's not misappropriation of asset, it's general fraud. Means the previous question. Pressures, opportunity, rationalization of attitude, all that. No, sir, now how can you tell me? Okay, the reason I understood. How accounts will be manipulated, sir? Can you tell me? They may inflate purchases, expenses, inflate sales, inflate closing inventory value, or suppress, nothing but deflate purchases, sales, other value. Vomiting outstanding liabilities, vomiting prepaid expenses, charging capital expenditure to revenue account, or treating revenue expenditure as capital expenditure. Somehow, how much profit I want to show depends on that. I can manipulate accounts. Or misrepresentation, financial statements of events, transactions, or other significant information. So I may misrepresent, or I may intentionally omit something. Intentional misapplication of accounting principle related to amount, classification, presentation, or disclosure. I'm intentionally misapplying accounting principles. This fraudulent financial reporting, how manipulation of accounts generally, it often involves management override controls that otherwise may appear to be operating effectively. Generally, for entire accounting record, for every journal entry, for every modification in journal entry, some voucher, some control is there. When top management is doing this fraud, these controls don't work. Controls only for the lower management, not for the top management. Fraud can be committed by management using techniques like fictitious journal entries, especially at close to the year-end accounting period, to manipulate operating results or achieve some other objective. Especially at the year-end, they manipulate records. Inappropriately adjusting assumptions, changing judgments to use it to like accounting estimates, judgments, vomiting, advancing, delaying recognition in the financial statements of some transaction which occurred in the reporting period. There is some transaction happened in this year, but we are delaying to recognize it. Or some transaction belonging to next year, but we are recognizing it now, advancing. Concealing, not disclosing some facts that could affect amounts recorded in financials. Some expenditure is there. If I record, profit will be very low, but I don't want to recognize. So mine is a car manufacturing company. I sold in Q3 some 10,000 cars. All these cars sold in Q3 were affected with some problem a mission. Technically speaking, I have given warranty on the car. I need to call back all the cars and repair. Each car will repair cost will be 1 lakh rupee. 10,000 cars into 1 lakh. Imagine the number. 100 crore approximately I need to spend, or 1000 crore I need to spend. But I didn't recognize. We know internally the company, hey, no, let us not recognize. If at all we recognize 1000 crore loss in the expenditure in this year, warranty expenditure, that's it. Our company financial figure will be very down. So we didn't recognize. We didn't even call. So why people do fraud? There are many reasons. Or I may engage in complex transaction, structured or misrepresent the financial position or performance of the entity. I sell goods to my subsidiary company at a higher price. Actually, I don't have sales. So what I do, I will sell goods to my subsidiary company at a higher price, and they will sell goods to another subsidiary company at lower price, and I will buy from them at higher price, and my company's main company, my profits look very high. Altering records, terms related to unusual transactions. So here, they may ask you a question by using this statement. Fraudulent financial reporting often involves management overriding controls, of controls that are otherwise appear to be operating effectively. Generally, controls looks everything fine, but management overrides. That overriding, nobody will notice, nobody will record. Getting it? So explain. They may ask you this sentence itself. They'll ask you an exam. Comment they'll write, or explain any 4 points. Then you have to write any 4 below. So totally 6 were there. Any 4 points you have to write. Hope you are able to understand how a question can come. Or they may ask you, there are numerous ways in committing fraudulent financial reporting. Explain few methods. Means you need to write any 4 points below. What are the various reasons why fraudulent financial reporting is committed? Reasons. Then you may have to write in these. First of all, why do management employees commit fraud? What induces them? What will motivate them? Financial obligations or pressures, unrealistic goals, dissatisfied employees, lack of motivation among employees, name game. Like management is using power of authority by asking employees to do something illegal. Opportunity to commit fraud. Whenever there's an opportunity, who will miss the opportunity to gain something? It may be legal or illegal, illicit, whatever. Now, what do you mean by misappropriation of asset? What do you mean by misappropriation of asset? Misappropriation involves what? Theft. In relatively small immaterial amounts. Nothing, when small petty theft happen, it's called pilferage. It can also involve management who are more able to conceal misappropriation in ways that are difficult. Sometimes top management may do pilferage. They update all the records in the backend so that it cannot be detected. Misappropriation can be accomplished in many ways. Assets can be manipulated in many ways. Assets like embezzling receipts. Suppose if I'm receiving in cash, I can say that the other party did not pay, but actually I received money. Embezzling receipts is a very big fraud in banking sector. In banking sector, embezzling receipts is very big fraud. Suppose I took a car loan. Example, I took a car loan. I defaulted. 1 year I used and I defaulted. Let us assume the car which I am using is 25 lakhs. I repaid some 5 lakhs loan. Then I defaulted. Now this car, I defaulted. I am not traceable. But this car is recovered by the bank officials. Bank management, recovery agents recovered my car. And the car has been kept in the godown of the bank. There is some godown or some yard is there, in that they kept. So what they do, to recover the loan, they sell it. They sell it for auction. Bank will sell it at a lesser price. See, this car, customer bought at 25 lakhs. 1 year he has used. This is the condition of the car. Bank price is 10 lakhs. Auction price is 10 lakhs. Whoever quotes higher amount, they will be sold the car. Now in this auction process, what some bank managers do, they will create records for auction, create records that auction was held, and show to the bank top management that this car is sold for 12 lakhs only, not even more than that. But in reality, this car will be sold by the bank staff for 14 lakhs. 2 lakhs manager will steal because this car open market value is 18 lakhs. But what bank manager will do, or what bank people will do, some people, they go and contact one car dealer. Hey, I have a car for auction in the bank. He will sell it for 14 lakhs. Okay, but I will give you only 12 lakhs bill. You take 14, you give me 1 lakh. Getting it, you take 1 lakh and 12 lakhs is the car. You sell it outside for 18 lakhs. What is your wish? So I am benefiting, you're benefiting. It's okay, bank will lose money. It's not yours and mine, no. This kind of fraud people are doing. Next. Stealing physical assets, intellectual property. Okay, companies' intellectual property, copyrights, patents. Causing an entity to pay for goods and services not received, dummy, fictitious expenses. Using an entity's assets, company assets for personal use, unauthorized usage. These are all misappropriation of assets. Misappropriation of asset is often accompanied by misleading records or documents in order to conceal the fact, so that assets which are missing or were pledged without proper authorization cannot be detected. Company car, I took the company car and took it under pledge or hypothecated and obtained loan. Only after some days, management discovered that there is a security, there is an encumbrance on the car. All these are misappropriation of assets. Example not required. Please strike off, not required. Now, what about misappropriation of goods? See, misappropriation of assets or misappropriation of goods means both are same technically, but misappropriation of goods means inventory, not fixed assets, not investments. Generally, goods means inventory. Fraud in the form of misappropriation of goods is even more difficult to identify. Management has to put so many measures. Apart from various requirements of record keeping, I know you are keeping a store register, CCTV cameras, everything was there. You are physically verifying, getting it. Record keeping is not enough. Record keeping alone is not enough. There should be security arrangements. Goods are taken out only with proper authority. Nobody can take out the goods without any authorization slip. So, apart from various record keeping, controls, all that physical quantities, there must be rules, there must be procedures for allowing persons inside the warehouse, who can enter inside the warehouse, who can take out the goods. There must be rules for that. Goods can be anything, maybe mission or even daily necessities, whatever. The goods may be removed by subordinate employees, or even top management can also manipulate the goods. So the auditor can detect this only through a careful checking of records followed by physical verification. Only I should check inflow, outflow. For what purpose? What is the balance? Okay, inflow, outflow, all the purposes are correct. Balance is this much. Go and verify physically how much is there. Everything is matching. Fine. If something is fishy, something is not matching, discover, investigate. You may discover fraud. Or by using ratio analysis, auditor may be able to form an idea whether such fraud exists by applying ratio analysis, by applying input-output ratio. How much scrap value? Sir, company records shows 5 crore scrap value. Sales from scrap is 5 crore. Closing stock of scrap is 1 crore. Totally 6 crores worth of scrap generated during the year. Okay, everything is super. What super? First of all, how much scrap generated in the company? How do you know that? Okay, bring me production records. In the entire 365 days, how much inflow of raw material to the production? 100 tons. 100 tons. Multiplied by what is the scrap ratio? 15%. Means 15 tons of scrap. What is the scrap value per ton? 50 lakhs. 7.5 crore. Oh my God. As per ratio analysis, as per the logics told by management, scrap value 7.5 crore, but 6 crore only books of account showing 20% variation. How come? I will investigate. Getting it? Input output ratio production in terms of physical quantity reveal whether output is normal with reference to quantity. So therefore, it is very clear from the above all discussion that fraud deals with intentional misrepresentation. Error refers to unintentional mistakes. Intentional errors are very difficult to identify. Auditors generally give more attention to this type because of long and sometimes of unfortunate experience which auditors have. So auditors have developed a point of view that if they direct their procedures of discovering more intentional errors, they are reasonably certain to locate more simple and far more common unintentional errors on the way. So if I try to discover more and more errors, generally so many unintentional errors will also be discovered in the process. But remember, discovery of fraud is not our duty. We never do audit with an intention to discover fraud. We never do audit with that intention. It's impossible. First of all, understand. Just a minute. Now, what about defalcation of cash? See, nowadays, cash related frauds were reduced. Only in banking sector, cash related frauds were there. But in almost big companies, cash related frauds were eliminated. By why? Because today most of the companies, big and medium small companies, they were not transacting in cash. They were only transacting through other than cash banking channels, phone pays, Google pays, net banking, fund transfer, NEFT, all that. Anyhow, how a fraud can happen in cash payment? How people can do fraud while making payment in cash? Making payment against fictitious expenses, making payment against vouchers where amount is inflated. Actually repair cost is 10,000, but I'm writing voucher for 12,000. 2,000 is for my benefit. Manipulating total of wages either by including their names of dummy workers, by keeping dummy worker name, mentioning that 200 rupees salary paid to 10 workers today in factory, daily laborers. They can do fraud. Or in cash receipts they can do fraud, adjusting unauthorized fictitious rebates, discounts on customer's account. Actually customer came to settle the money. Actually we sold goods on credit to a customer for 10,000. He came and paid 10,000. But why should I record 10,000 in books? I will record 9,800. 200 rupees I'll keep in my pocket. I'll tell to the management, sir, customer paid only 9,800, sir. 200 he didn't pay. He told me to treat it as discount. Management agreed. Like this, I do 100 frauds in a year. Writing of bad debts in respect of cash which has already been received. I was appointed as a recovery agent for a bank. I visited customer house. I fought with customer like anything. Ultimately, customer paid me 1 lakh rupee. I went to bank. I told the bank, customer settled only 50,000 rupee. 50,000 rupee only customer settled. So remaining 50,000 bank will write it off as bad debt. Not accounting cash sales properly, not accounting miscellaneous receipts like a scrap, all that. Writing down assets value in entirely and selling them subsequently, misappropriating proceeds, selling some depreciated assets. Or teaming and ladding. What is this teaming and ladding? This is the kind of fraud which happens in chit fund businesses. Chit fund. Some people know they do chit fund business. They do, they do chit fund business. How they do, chit fund? Like in a chit scheme, no. I'm an organizer of the chit. Some 20 people were there. I'm an organizer of the chit. Some 20 members are there. I need to bring 20 members and I need to conduct the chit. I don't know how. I hope you know how it works. What I'll do is, suppose nowadays people are not meeting in chit fund. Whoever is the organizer, on this organizer, people will have trust. So what I will do, I'll call some 15 people and I'll ask them to join. To every one of them, I tell 20 members were there. Who are the balance of 5 members? I am only. But people will think some other member is there. Getting what I'll do, first 5 months, first 5 chits auctions, I will take the money. People think, remaining 15 people think, okay, some customers would have taken the chit money. They auctioned and they would have taken the money. 6th member onwards, I will be paying his own money. Once the 16th person liability comes, what I will do, I will start another scheme and I will join another 15 members there. And the first 5 I will auction and then pay to these 5 so that I will not default. Or why to take such a complicated example? Because this is what happening in outside reality. But anyway, I'll take another example. Suppose my company allocated me the duty to collect collections from debtors. So what I'll do, I'll go to a customer. I collected money. So today I need to collect from customer 1, customer 2, customer 3. Tomorrow I need to collect from customer 4, customer 5, customer 6. Day after I need to collect customer 7, customer 8, customer 9. So these are my collections in the next 3 days. Likewise, every day I have some collection. Today, from all the 3 customers, I collected 10 lakhs. Out of this 2 lakhs, I will use for my personal purpose. What I will tell management, sir, only 2 customers paid, sir. Customer 3 not paid. He told me to come tomorrow. Management also agreed. Okay, 1 day delay, not a problem. So 8 lakhs, these 2 people paid. Okay, this person did not pay 2 lakhs. It's okay. Tomorrow you go and collect. What I did, next day I went and collected from these people, 10 lakhs again. Out of that 10 lakhs, I as it is gave the 10 lakhs to management and told, sir, customer 6 has to pay another 2 lakhs, sir. He didn't pay. But customer 3 paid 2 lakhs, 4 and 5 paid 4 lakhs. Totally 10 lakhs is this much, sir. Hey, very good collection agent. But actually, from customer 3, he manipulated already. Now the blame is on customer 6. Management is thinking customer 6 not paid. But I know he paid everything. Now, sir, tomorrow he will pay. No. Tomorrow management will identify. No. Tomorrow management will not identify. Tomorrow I'll go for some other collection. No, I will collect out of it. I will allocate some amount to customer 6. Remaining will to customer 7, customer 8. I will tell management. Customer 9 did not pay, sir. Likewise, I'll keep on continuing. That is called teaming and ladding. If management directly contacted, suppose second day I went, sir, customer 6 did not pay, sir. Management called customer 6, sir, why you didn't pay? Sir, he replied, sir, I paid, sir, see the proof. Then this fellow will be caught. Amount received from first customer is misappropriated. Swaha. In the above case, to prevent its detection, money received from another customer subsequently will be credited to the account of first customer. I will allocate it for first customer. Similarly, money received from third customer, I will allocate for the second customer, so that no one is outstanding for management to call, to send him any communication, to send him a request. So in this way also a fraud can happen. Next. So that's about fraud, fraudulent financial reporting, misappropriation of assets. Now let's discuss little more. Now write about fraud risk factor. What is a fraud risk factor? What factors causes fraud? That's called fraud risk factor. Fraud risk factor means what? It's an event, or it's a situation, or it's a condition that indicate an incentive, a gift, a motivation, or it's a pressure to commit a fraud, or it may be an opportunity to commit a fraud. The following are there are many risk factors. For fraudulent financial reporting, the risk factors are different. For misappropriation, the risk factors are different. Anyhow, the risk factors are broadly classified into 3 types. It may be an incentive, you may get a benefit or pressure. You see, we generally do fraud because we get some benefit, or because of pressure, or you're having an opportunity, you want to steal something, or your attitude is like that. Now, what are the examples for fraudulent financial reporting, and what are the examples for misappropriation of asset? In case of misappropriation, sir, I'm a store manager, sir. Without knowledge of the company, I stole some goods and sold, sir. Why you did? Pressure, sir. Family problems. Sir, I overvalued inventory. No stealing. No, I didn't touch single rupee of the company. But the company closing stock value, I overvalued. Why? Pressure, sir. What? Family pressure? No, not family pressure. Top management pressure, sir. Holding company pressure, sir. Shareholders pressure. So, pressures for fraudulent financial reporting, nothing but manipulation of accounts. See, fraud is 2 types. Fraudulent financial reporting, nothing but manipulation of accounts. Misappropriation of assets. These both types of frauds are committed because of the pressure, because of the opportunity, because of the attitude. But the examples are different. The pressures we have, the pressures for manipulation of accounts are different pressures, and the pressures for stealing the goods are different pressure. So the pressures are different for accounting manipulation, and the pressure is different for misappropriation of goods, assets. Opportunities are, see, how do people manipulate accounts? Accounting estimate. So that's an opportunity. I will use wrong estimate and manipulate the accounts. How do I misappropriate? I will switch off CCTV cameras, everything, and I'll go and steal some goods. The opportunities are different. Next. So that's about fraud risk factor. That's about fraud risk factor. Now, question number 10, examples. Okay, what are the risk factors relating to misstatements because of fraudulent financial reporting? So what are the examples of pressure? What are the examples of opportunities? What are the examples of rationalizations? Same way, misappropriation of asset will happen, right? Means theft and all. Why theft will happen? Because of pressures. Give some examples. Because of opportunities, examples. Because of attitude, examples. Why? What attitude made an employee to steal company assets, to damage company assets? What made him? Examples are different. So all this we will be discussing in the next video. Come to the next video. In the next video, we will be discussing this little more elaborately. Okay. Probably I'll complete this chapter in the next video itself. In the next video itself, I will be closing this chapter. I hope you understood this part. Now what you have to do, now don't directly come and watch the next part. First read whatever we covered, 9 questions we covered. Right now your responsibility is to read that. Read thoroughly once. Understand what we discussed. So come to the next lecture.